I am here today, despite the blackout before FOMC, to tell you regards not to pump the market. If you pump the market, I will have to bitch slap you on Wednesday. Let me take this opportunity to tell you that I already sold at the top. And me and my fellow Fed buddies are looking to get back in long once the market bottoms at 3,600. That's the JPM collar put leg for those of you keeping track at home. Me and Jamie Dimon planned for this. Also, we are going to bail out the banks, but you fuckwads better not pump the stock market on this news. Always remember, God bless my money printer.
GM and welcome to FOMC Day. A nice preview there from Jerome, probably one of the best deepfakes I've seen so far. Anyhow, what we have today is the shaping of the markets over the next 6 weeks. As you can see on screen, March 21st, 22nd, today, FOMC press conference later. We don't have one until May 3rd. So around a 6-week time period now within which Jay Powell will set up the markets with his forward guidance. So the key to all of this is going to be Jay Powell's press conference later today. That is at 6:30 p.m. That is UK time here for myself. So do tune in for that one. It could be very important. Of course, the announcement around the Fed's fund rate, what it's going to be, probably a 25 basis points increase at this point, may not be all that important, but what he says, if he's hawkish or dovish, could well spell the difference. Before we do jump on in here, almost at 31k subs, so please do subscribe to the channel if you're new around here. So here we have the Bitcoin chart on screen mapped out for you. The box is the 28.5 to 32k region. That is the weekly resistances you can see on screen. Of course, Bitcoin just a little bit below that, 28.1k at this point in time. We've gone as high at around 28.4, 28.5, depending on your exchange. Then the yellow line mapped up is the monthly resistance. That is $34,000 or that kind of range. And this is a key area I think we will test as resistance over the coming weeks. Now, factoring in Eric Crown's analysis, which I love, and if you haven't checked him out, go and watch his video from today after this one. Well, he suggests that according to the statistics and probabilities, we will come towards 34k over the next 3 to 4 weeks. That's the white line on screen there, around 17th of April or just a little bit before. So that's the kind of time series I'm working with here. If we rally into that area and everything does come in kind of within the first standard deviations of his analysis, this is the potential setup. As ever, it won't be plain sailing. We probably will get a bit of a spike down today, liquidate some longs, maybe a nice move up again, maybe a bit more chop, and then move into that kind of region around that midpoint of April. Absolutely fantastic drawings, I know, but that is the kind of analysis that I've been consuming from Eric for quite some time now, and he is very accurate with what he represents. And a test of a monthly resistance would make sense, having really respected the monthly levels previous to this. For those trading on a shorter time frame, here are some of the liquidation points for Bitcoin. So the big pink bubbles are areas of interest where there's a lot of longs ripe for liquidation, people on like 50x and even 100x leverage. And this kind of region here is around $27,000. You can see the darker shading here. And that one is quite a long bar there, which indicates around $200 million worth of USD liquidations for Bitcoin. It is kind of just off your screen there as I can't really get it to fit. But just to be aware, of course, during these FOMC periods, we have a lot of market volatility. The market makers typically put on these big Darth Maul candles, i.e. one of those lightsabers that is double-ended, so you get spikes to the lows, hunting for people's stops, and then to the highs as well, hunting for short stops as well. So they will try and liquidate people. We see this over every key catalyst in the market, and so why would today be any different? The market makers will certainly get paid, and it could be interesting to see some of these liquidation points get taken out before the trend continuation, which is kind of my approach here. Now, a really good podcast that was released is between Alex Pompliano and Raoul Powell, the macro expert. So these guys effectively did one of the biggest podcasts prior to the previous cycle. And could this be a telltale sign for the next cycle here? Well, I just want to share with you a clip. It's around maybe a minute and a half here of Raoul talking about inflation, as of course, inflation is the topic of today and how he sees inflation coming down very steeply here. So let's just listen into this.
But when I go back and say what lags, well, CPI lags by at least 6 months, wages by 13 months, and shelter by 16 months. If you look at the Trueflation, which is this on-chain inflation metric They're showing inflation in the US is currently 4.1%. My forward-looking indicators based on all of the work on the business cycle, and it's not really voodoo, it's pretty straightforward, that stuff is showing we get to 2% or even below by the summer. My work suggests we've got a decent chance that inflation goes negative. What we've got is a bunch of people on Twitter looking at inflation today and saying, oh my God, it's 6%. But in fact, actual real-time inflation is 4.1%, and forward-looking inflation is probably below 2%. And this is what the Fed gets wrong. It always tightens for the public narrative, and the public narrative is inflation is too high. If you look at the commodity prices, almost every single one of them is now down year on year. They're deflating. Some of them, like nat gas, are down 75%, contrary to the public doom of which they were saying, well, the Europeans are going to be chipping their frozen bodies off the streets in the winter because there's no gas. The opposite happened. So people just think that this inflation that they see today is the future, and it's wrong. It's wrong every time.
So first off, can confirm the winter has been mild. It just rains every day here. However, what he's saying here is that the Fed's indicators for inflation are obviously at a massive lag. And what we're going to see is a steep decline in inflation here. And if we look at some of the statistics he's talking about here, first and foremost, natural gas, down massively over the last year, as you can see from the chart on screen here. But the Trueflation statistics is what he's referencing. So this is app.trueflation.com, which takes in a load, like hundreds of thousands of real-time data points and plots what the actual inflation rate is of the US right now. And that's down to 4%. I think the likelihood is today we get a 25 basis point rate hike from the Fed. The ECB committed to a 50 basis point rate hike, even with banks blowing up in Europe. They're obviously doing the backstop thing, but what they need to declare is the war on inflation as, done. They need to take their victory lap. So a lot of people have talked about Fed's fund rate needs to be above the inflation rate. They're about to achieve that. Maybe not this meeting, obviously the data hasn't shown that for them as yet, but in the next meeting around May, they probably can do that victory lap, as Fed's fund rate likely to be around 4.75% and inflation likely to be below that level. So this will be a real key marker, and I think it's very political at this point, the inflation data. So if inflation is coming down, the Fed's fund rate has gone above inflation, they can then start to talk about cutting rates. So if we just look at the data today, 88% chance of a 25 basis point rate hike. In the next meeting then, it's suggesting 35% chance it would stay the same. That is 25 bips from today, and then stay the same at that rate of 4.75%. But the market also pricing a potentiality of another rate hike. The following month, the stats are saying stay at 5%, and then into July, this would be the first rate cut according to the CME data here, essentially what the market thinks. So whilst we can't know for sure what is going to happen, it does seem that a rate cut will be on the horizon in the next few meetings. And so this obviously plays into what the forward guidance is from Jerome. Anson put together a really good summary of his thoughts here. He says it's glaringly clear the pace at which the Fed raised rates and how high they raised rates is causing damage in the economy. And they will have to walk a tightrope of providing liquidity to ensure stability whilst also continuing to bring down inflation. Difficulty with trading this lies in expecting contagion across the economy, balanced with how the Fed will respond with their support. Some will argue the Fed has already shown their hand, i.e. easing and printing adding to their balance sheet, whilst others are still waiting for a March 2020-like moment, a real collapse. His FOMC bias, trend continuation, i.e. up, unless they signal a dot plot significantly higher, and overly hawkish language from Jerome in the presser. Short pullback if higher than the market's current pricing of around 4.5%, and all risk assets will rip up if they hint towards pausing earlier. So here is the Fed's balance sheet. We can see it kind of bottom for them, $8.3 trillion on the 8th of March, and then went up $300 million the week after, pretty much a one-day print there. Raoul Powell tweeted this, posted this back in July of 2021, and equally as relevant today. So he says the SPX, that is the S&P 500, has a 97.5% correlation with the G5 central bank balance sheets. I.e., as you can see from the meme there, money print to go burr by everything. So as the balance sheet expands, the stock market should go up.
Number one rule of Wall Street. Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles. Least of all stockbrokers. It's all a fugazi. You know what a fugazi is?
Fugazi. It's a fake.
Yeah, fugazi. It's a wazi, it's a woozy, it's a fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart. It's not fucking real. Right?
So the stock market did breach below the blue line. That was a support for the S&P 500 temporarily, but you can see it kind of bottomed there on the 10th of March, around the time the Fed's balance sheet expanded yet again. So Raoul's analysis is suggesting that increase in Fed balance sheet equals stocks must go higher. So the bottom, therefore, would be in. So right about now, we should all be cheerleading Bitcoin. Just to show you the Bitcoin hash rate, this is over the last 3 months. You know, it was averaging around 250 equihashes, now up to almost 350 equihashes. And this just looks incredible as you zoom out. 6 months, 1 year, 3 year, all. As you can see there, the BTC hash rate is going from strength to strength, pushing new all-time highs all the time, and price typically follows the hash rate. Bitcoin continuing with its uptrend here. It has a lot more use cases coming online as well. We have ordinals, we have sidechains and layer 2s for Bitcoin coming out. And I think this next cycle will be marked by DeFi applications secured by the Bitcoin network. So the longer we can cheerlead Bitcoin and ensure that this is front and center for the crypto space, the better this will be. Get Bitcoin right up there, suck more and more liquidity into this market, and then we'll have a great alt season. So I hope you're all strapped in, ready for the FOMC later today. And if you enjoyed this video, make sure you smash a like on it, subscribe to the channel, and I'll see you in the next one. Peace.